Hello traders and welcome to today's session. So before we begin, I would like to invite you to like and share this video, subscribe on our YouTube channel and turn on the notification bell so that you won't miss any of our future events and live webinars like this. Okay, so before we begin as well, I would like to share you with this opportunity. So OctaFX has started the festive season and they are playing with the numbers this year. So the year 2023, and they're going to raffle off 2023 prizes. So sounds good, doesn't it? So and as always, what you can have is a 15% lower spreads. You can win a 1 to 1,000 leverage and a double deposit. And the festive season started last November 28 and it will last up to December 26. So everyone is welcome to join. So all you have to do is to trade the way you are used to. The system will automatically sum up your lots, and if you get one lot, you might win one of 2,000 merch packs. If you get three lots, you can take part in a draw for an iPhone or a MacBook. And finally, if you enter the draw for three iMacs, or you will have a chance to enter the draw, and you will have a chance to win iMac if you collect 5 lots. Okay? So I know that this opportunity is good and it is too good to pass up. So all you have to do again is to trade just like how you are trading on your live account, and we will automatically draw your entry once you get one lot again. For 2,000 merch packs, 3 lots, you will take part of a draw for a chance to win iPhone or MacBook, and 5 lots for a chance to win iMacs. All right, and I want to invite you again to please fill out the form below. You will see it below the description. Fill out the form below so that you can attend our exclusive Q&A session with me. Okay, so once you signed up with that link, then our team will invite you, and then you will see the details for the Q&A session, the time and the date for it. Okay, so today we are going to continue with our Forex workshop. So finally, we are on the fourth webinar for this whole workshop, and this is the what I believe the most anticipated webinar from this whole workshop, because I believe most of you wants to learn how to trade price action, how to read the chart, right? And I myself is very excited to share you my own personal trading strategy, and we are going to talk about a lot more technical analysis in this webinar. Okay, so to begin with that, so the first lesson for our webinar today will be the steps in trading the market. So here, as you can see on our graphic right here, in if you first saw that, if you are first time seeing a chart like this, so this is very overwhelming at first, right? Because once I started, I myself was very confused and I don't know how to start, and I don't have any idea on where to begin. I don't have a personal mentor where I could ask some questions. Unlike now that uh, here at OctaFX, we are sharing our knowledge and we are doing this so that we can provide value to you. But when I first started, I don't have anyone, or I don't have anything that is sharing their knowledge to me, and it is very overwhelming at first to look on the charts like this. So because at first you don't know what to do, you don't know what to look for, and you don't know any price action pattern, and you don't have any knowledge about entry candlestick patterns. Like so, right. So here in steps in trading the market, I would like to share you my own trading strategy, and which is the CEST method. Okay, so as you can see here, this is what I am using on my own, and the C stands for condition. Okay, so this is the first step in trading the market. The C stands for condition. So condition means that you need to look for a trading setup based on your trading rules. So therefore, you need to have your own trading rule. And we are going to talk about that later, about the trading rules. And I will teach you on how to read the chart and what to look for a condition. Okay. So first in condition, of course, you should look, or you need to look for the trend in the market, the prevailing trend, if the market is up or if the market is down, or if the market is just going nowhere like this. Okay, so the first thing again is you need to look at the condition before, because this is where your trading begins. Once you saw what the market is doing right now, and once you saw the trading setup that is favoring your trading rules, then of course you can take a trade based on that structure, or based on the structure of the markets. Okay. And the second one, after looking for a condition, so let's say we have an uptrend like this. So as you can see, we have a good example of an uptrend right here. So the question is where to put an entry, right? Or how to enter a trade, or how to enter a chart. Do we need to look for an entry candlestick pattern? Do we need to look for a price action pattern? Do we need to look for something that will generate a profit for us, a possible win for us? So that's the second thing. We need to look for an entry pattern before taking a trade. Okay, so maybe you heard before, or you watched before, something like a double bottom like this, or a buy on support, a sell on resistance, buy on breakout, something like that. So we are going to talk about that later. Okay, and then of course the third one is you should look for a reasonable place on where you put your stop loss. So for example, you bought on this breakout, then the question now is where to put your stop loss. Should you put your stop loss right here? So assuming that we bought here around this level right here, let's say we have a breakout candle in this resistance level. So should we put our stop loss down here, just a few pips below our entry candle, or should we put it maybe a little bit lower than this, or should we put it below here in the previous low? Okay, so that's are the some of the problems, or some of the questions that I encountered before when I was starting in trading. So later I will show you on how I am looking for a reasonable place on where I am putting my stop loss. Okay. And the last one is where will we put our target. So we talked a lot about this before. So for our target, we can target a 1-to-1 risk to reward ratio, or we can make it something like 1:1.5, just to have a higher reward than our risk. Or we can also aim high than our risk, like 1:2 risk to reward ratio. Or we can also put our target. So let's say we put our buy entry in the support level. So this previous resistance might turn into support, and let's say we bought right here. The question is where will we put our target if we put our stop loss right here, right? So that's the dilemma of some traders about their take profit level, or their target. They don't know where to put it. They don't know how to use a risk to reward ratio, and sometimes traders tend to put their target right around the previous high, which is also a good strategy. Okay, so those are the things that we need to take, or we need to evaluate first before trading the market, before looking for a trade. First, again, you should look for a condition, an entry, as a stop loss, a reasonable place on where we put our stop loss, and a proper placement of our target, or our take profit level. Okay. And for market analysis, then the question now is how to look for a trend. So can you show, or can you share me Can you share how you are looking for the trend? So can you put on the comment box below on how you are looking for a trend before I shared you on how I am personally looking for it? So hello to Kuya Tolits TV, Kishan Basak, BZ Wong, Rashid Samir. So welcome to the beginning of our lesson for the day. Okay, again, so may I ask if to for you to put your so here Jay Rebosora said that he is adjusting his time frame, which is also a good strategy. How about the others? May I know how you are looking for a trend? Hello, Renaissance Man. Glad to see you again in our webinar today. All right, so other traders are using EMA, right? Or they are using a moving average like this. So here, Risa Orlando told that he is using a structure, a broken structure, which is also a good strategy. And speaking of the moving average, so here some of you commented that you are using 200 MA, like Roberto Dapilan, as well as Kuya Tolits TV. He is also using moving average. So if you are using a moving average, so here in this example, we have the 20 EMA. Okay, so as you can see, I have 20 EMA on my chart. So the very common strategy for those who are using the EMA is they are using it as a trend filter, right? So for example, the price is below the EMA, like here, like what we have here. So that means that we have a downtrend, right? And then whenever the price is above the EMA like this, then that means that we have an uptrend, right? So some of you are telling me that you are using um two two time frames, right? So this that's a good idea as well. If we have time later, I will show you on how I am using multi time frame analysis. Okay, so that's the first or the most common strategy on how to filter a trend, right? So all you have to do is to open your EMA, and then once the price is trading above it, then that means we are on an uptrend. And once the price is trading below it, then that means we are on a downtrend. But the most basic strategy on how to look for a trend is to simply zoom out your chart. Okay, so just like this, if you zoom out your chart, you can clearly see that the price is going up right here, right? And let's try to change our chart. So here we have euro pound, and if we zoom out our chart, we can see that the prevailing trend or the overall trend is going up, right? Or the momentum is going up until the price showed us some weakness right here, which is forming a lower high. So later we will talk about higher highs and higher lows. But right now, let's try to use the zoom out chart strategy or method for now. Okay, so tell me what trend we are in with the euro dollar. If I zoom out the chart like this, can you tell me in the comment box on what trend we are in right now? Oh, hello, Adrian Mangulabnan. Good evening to you as well. So here Miyaj said he is using support and resistance. All right, can you tell me what trend we are in right now for the euro dollar? So on zooming out the chart like this. So here Anton Ternate said that we are on a downtrend. How about the others? Do you think we are on a downtrend? So here, some of you are saying that we are on an uptrend, and some of you are saying that we are still on a downtrend. So it looks uptrend. From November, it is uptrend. So a nice answer from Rosel Ocampo. Risa Orlando as well said that we have an uptrend right now. Okay, so for me, if you ask me, we are obviously going up, right? So here, as we can see, we break this previous resistance right here, right? So that means if we have a break of structure, just what um, like one of us here on our chat said earlier that he is using a broken structure. And if we use his strategy, then that means we are on an uptrend right now. Okay? So the question now is how to look for a structure like this. Of course, we must use the area of value or the important structure levels in the chart, right? So the question now is how to look for the overall trend or the structure. So here, as we can see, we are we came from this downtrend, right? So some of you told me that since November we are going down, which is right. Some of you told me that we are now on an uptrend, which is also right. So um, if we look on our price action today, then obviously we can see that the price is making higher highs and higher lows, right? So again, the first important thing is to zoom out your chart. And once you saw that the price is going up or down, then we should base our trade based on the trend. And in this case, on the euro dollar, we are on an uptrend. So that's or if we are on an uptrend, then we should look for a buying opportunity for this pair right now, right? Because we are on an uptrend. So now the next thing that we need to analyze is to identify swing highs and lows. So just like what our friend commented here earlier, he said that he is using swing highs and lows, which is also a very good strategy. Okay, so let's use a blank chart first before moving on with our live market or with our live chart. So the first thing that we need to remember, if we are on an uptrend or whatever trend it is, whether we are on an uptrend or down, the first thing that we need to remember is the trend is not going on a straight line like this, right? If we have an uptrend, we can see a price action that is going on a straight line like this. And if we are on a downtrend, the same thing is true. We can expect to see a straight line like this if we have a downtrend, right? So the nature of the market is, or the normal thing that the market does is it is moving in a wave like this. So first we will see we would see a first leg which is what we call an impulsive move. Okay, and then the first correction, like what we have here, is what we call a correction move. Okay, and then the third leg that we have right here is our last impulsive move. All right, so this is the nature or the normal structure of the market. So if we have a structure like this, just like what our other friends commented in our comment box, they told me that they are using structure like this. Okay, some of you told me that you are using broken structure, which is also a good idea, and we are going to talk about that later. And in this example, let's just focus on a pattern like this. So whenever you are seeing a trend or a structure like this, So like what we have here below, we can clearly see that we have a structure like it, right? If we use this recent structure level or this recent price action, we can clearly see that we have a pattern that looks like what we have here above. Okay, so for this one, we should always remember. So let me just delete it first. So let's always remember that the important levels in the chart is the most useful or the most reliable trading structure if we want to trade pullbacks or breakouts. So let me just share you this illustration. So let's say we are in Manila and we want to go in, let's say, Palawan. So let's say we started our flight in Manila, and then the plane goes up, and then we have a little turbulence like this, and then we goes up again. So do you think we will remember this turbulence right here because it is deep? It is very deep, right? So if you rode a plane before, of course, I am sure that you will remember this turbulence right here, right? But if you only experience a turbulence like this, you won't remember it just like how you remember this one, right? And let's say that the plane continue to go up, and then we have a deeper turbulence like this, and the plane continues to go up. Then we have another deep turbulence, and then the plane continues to go up again. Then we only have a little move like this or a little turbulence before continuing to go higher. So do you think the turbulence right here and right here will be remembered or not? Or do you think you will suffer some headache from this turbulence right here? Can you put your answers on the comment box? Hello to Ashish Singh. If I'm not mistaken, you are asking about the pound dollar trend setup today. So we are going to analyze some charts later, and you are freely or you are free to comment some chart requests later. Okay. So again, do you think the little turbulence like here that we have here will be remembered, or do you have or will you have some headaches? So here, Roberto Dapilan, Roselo Campo, Clifford, Casalbon said no, and you are right. Yeah, right. If you are riding a plane, then the most turbulence that you will suffer a lot is the turbulence that is deeper, like this, right? If the plane had a turbulence like this, then I am pretty sure that you will remember it until you go home, right? Because it is deeper than what we have right here. So the same is true. The same thing is true in the structure. So whenever we are seeing a movement like this in the chart, then that means this is an important structure level, and we need to watch out from this structure because this is where the supply and demand is playing, or this is where a lot of market participants are very active, unlike what we have right here, which is very small and we can just call it a noise. Okay, so to continue, now, right now that we know that we have a pattern like this, like the first leg is what we call an impulsive move, and then the second leg is what we call a correction move like this. So this is the impulsive move, the first impulsive move, and then this is our first correction move. Then this will now be our second impulsive move because remember this is just a small turbulence and we will not remember it, so we can just call it a noise. Okay, and this will be our next correction move, and this will be our next impulsive move, our next correction move, and our next impulsive move will be right here. Okay? So now that we know the pattern or the nature of the market, now we need to understand that this is what we call above here, this structure right here is what we call a high, okay, or highs. So let me write it. So we can call it high, the structure right here above, and below it is what we can call or what we call a low. Okay, and if we have a high that is higher than our previous high right here, then that means this is what we can call a higher high. Okay, and this low right here is higher than our previous low. So that means this is what we can call a higher low. So something like that. All right. And our next higher high is right here. Our next higher low will be right here. And our next higher high is right around here in this level. Okay. So again, if you are or if we have an uptrend like this, then our first move like this is or our first impulsive and corrective move is what we call a high and a low. Then once we so a breakout from this level, then this will now be our higher high. Once the price pulled back, then this is what we can assume that this will be our higher low. Then if the price breaks another structure, then this is again our new higher high. Then if the price pulled back again, then this is again our higher low. And then always remember that if the price is still below this resistance or this recent high, then whatever the price does inside this range, this previous high and this previous low, this is what we call a sideways. All right, or this is what we can call a consolidation. Means the price is just moving sideways or moving nowhere between this previous high and this recent low that we have right here. And we can also use it as our Darvas box pattern. Okay, so if you don't have any idea about Darvas box is a very, very useful strategy for a breakout trading or for a breakout strategy. It is founded by Nicholas Darvas way before. I think if I'm not mistaken, he invented it at around 1950s, and he became a millionaire using this strategy. All right, and once the price made another breakout from this previous high, again, this will now be our next higher high. But if we saw a breakout from this previous low, then that means this is no longer an uptrend. All right, or this is a sign of a weakness. If we have an uptrend like here, so let's say we have an uptrend and then the price breaks this last higher low that we have right here, then that means this is a sign of weakness and we shouldn't look for a buying opportunity if we saw a pattern like this, because this is a sign that the uptrend is losing its steam. Okay, so we should be careful if we saw a pattern like this. So going back on our live chart, if we use the highs and lows, then we can see that we have, so beginning with this downtrend, we can see that we have this pattern. So we have a high right here, right? And we have a low. Then we have, so for a downtrend, it is just inverted. You just need to make it inverted. So this will now be our lower high, and this will now be our low. We just need to invert it. So this is our high, and this new high right here is lower than our previous high. Then this is what we can call a lower high. Okay, and this low right here And once the price breaks this low, we have now a low that is lower than our previous low, then we can call it a lower low. All right, so it is just the same. All we have to do is to make it inverse. All right, so going back in this chart pattern, so we have um, a high right here. Sorry about that. So we have a high right here, then we have a low. Then the price form a lower high, then the price form a lower low right here. So clearly, we have a downtrend right here. Okay, so if we use our replay tool, so let's say that we only have this data right now. So that means we should look for a selling opportunity because we are on a downtrend, right? So remember in Forex, you can earn whether the price is going up or down. If the price is going up, then we should only look for a buying setup or a buying opportunity. Then if the price is going down, then we should only look for a selling opportunity. But in this example, so like what we have on an uptrend, if the price breaks this previous low, let's say the price breaks this previous low, then that means the uptrend is losing its steam, and we shouldn't look for a buying opportunity because of this. And likewise, if we have a downtrend and the price breaks this previous high, let's say the price breaks it, then that means the downtrend is losing its steam, and we shouldn't look for a selling opportunity, and we should look for a buying opportunity instead because we can expect a start of a reversal if we have a pattern like that. All right, so in this example, we can see, or we can clearly see that we have our previous high right here, right? And we have our previous low down here. Okay, so going back in our illustration right here, we can see that our third point is to look for the area of values. All right, and applying this on the live chart, then we should look for the previous highs and lows because this is what we call the area of value or the most important levels in the chart. Okay, so let me just delete this one. And so here, if we have a pattern like this, again, this is the first impulsive move, the first correction move, and the second impulsive move. So for us to make it simpler, let's just call it an ABC pattern. All right, so this first impulsive move right here is what we can call an A. All right, and the second impulsive move that we have right here is what we can call our B. So that means this resistance right here will be our A, and the support that we have below here will be our B. Okay, and the third impulsive move that we have right here is what we can call the C. All right, so that means if we have a pattern like this, so every time that you saw a pattern like this, then just always remember that this is an ABC pattern for an uptrend. For a downtrend, it's just the same. So we have our first impulsive move right here, our first correction move right here, and then our first or our second impulsive move in this level. So again, this is our A. So this support will be our A, and this first correction move is our B, and this resistance is our B, and this next move right here will be our C. All right, and the structure or the important level of structure is the recent A and the recent B. All right, so always remember that the most important level in the chart will be our recent A and our recent B below here. And for a downtrend, we have our recent low right here, which is our A. And this is also the most important level in the chart, as well as our recent resistance right here, which is our B, right? So for us to take an entry, so here as we can see, our fourth point is to look for an entry. So after looking for the overall trend, so in this case, we can see that the euro dollar is downtrend here in this example. So um, after looking for the overall trend, the prevailing trend is down here as we can see. Then the second thing is we should identify the highs and lows. So we already did it, and we already know what to look for in a chart. So we have the ABC pattern for an uptrend. It will look like this, and for a downtrend, it will look like this. Okay. So once identified, then we should look for the area of values, and the area of values will be our previous A and our previous B. Okay. For the downtrend, this will be our previous A, and this right here above is our previous B. Then after combining all of those factors, then we can now look for an entry. But the question is where to look for an entry, right? So this will be the most important topic here in this webinar today, because this is where we will have a chance to make a profit in a single trade. So assuming that we have an ABC pattern for an uptrend, so let's just remove the downtrend example for now. Or let's just use downtrend because the trend is down on our live sample right here. Okay, so let's just use the downtrend example for now, and let's just remove the uptrend. So here in this example, we have a downtrend. Again, our fourth point is to look for an entry after looking for a trend, identifying the swing highs and lows, and looking for an area of values. Now the question is where to look for a trade. So this is the first thing that we can do if we want to look for a trade. The first thing is we should look for a pullback. Okay, so after identifying that we have an ABC pattern like this, then the most common nature or the normal nature of the chart or any market out there, whether you trade stock, whether you trade crypto, the normal thing that the price action is doing is once an area of value has been broken like this, it has a tendency that the price will pull back into it like this. Okay, so in this example, we should look for a pullback like this. Once the price pull back in this previous A, again, always remember that this is previous A and it is our first structure, our first important structure or level of structure in any chart or in any market. Okay, and the second important structure is our previous B, because once it's been broken, then that means this downtrend is losing its steam, and we shouldn't look for a selling opportunity if that happens. Okay, so let's say the price pulled back into this previous low or this previous A, then we can look for an entry pattern right around this previous support that may turn into resistance right here, and we can expect for the price to continue going down because we have a downtrend. All right, and if we look for our live chart like this or right here, we can see that we have our ABC right here, right? So let's say that we only have this data for now. So we have this 1, 2, 3 or this ABC pattern like right here for a downtrend, right? So once identified, after identifying the trend and the structure, all we have to do is to look for our previous A, which is right here, and then put a horizontal line or a zone, a support zone. We can use this structure right here as our zone and our previous A. Again, the most important level is our previous A, but we can also look for an extra structure like this. So because the nature of the market, it is not perfect, right? Sometimes we can see a noise like this. Remember, this is the This is the small turbulence, like if we are riding a plane. Remember, this is what uh, what a small turbulence looks like, and this right here is the big turbulence. Okay, so we can put it together like this, and we can draw a resistance zone right here. So if we play our chart, so let's see if we can have a pullback in this previous support, then we can expect for it to become a new resistance. Then we can expect for the price to continue going down because we are on a downtrend. Remember, if you are on a downtrend, then there's a high chance for the market to continue going down. And if you are on an uptrend, then there's a high chance for the price to continue going up. Okay, so let's see now if the price can go back into this previous support and if the price can continue going down like this. All right, so let's play the chart. So here we can clearly see that the price is now trying to go up. So again, all we have to do is to look if a candle can touch this previous support, and if we can have an entry candlestick pattern, then that's a good opportunity for us to take a short trade right into this previous support that may turn into resistance. So later I will teach you some candlestick pattern. So stay tuned for that. So here, as we can see, the price is showing us some weakness. So that means if someone bought here, then maybe they are taking their profits right around here. That's why we are seeing some movement like this or some red candlestick. Okay, because for example, you bought here, then if you want to take your profit here, and you may do it as well. So let's see if the price can reach this level. So there, as we can see, the price nearly reach our zone, our resistance zone. We didn't quite reach it, but as we can see, we already have an entry candlestick pattern right here. So let me show you some entry candlestick pattern, which is the most the most common entry candlestick pattern that the traders are using. So the first entry candlestick pattern that we can use is an engulfing candle. So assuming that we have a green candle here, and then the next candle engulfs it, meaning that this next red candle close below the closing price of this previous green candle, then that means this is what we can call an engulfing candle. Okay, and the second most common reason candlestick pattern is what we can call a pin bar, or other traders are calling it a shooting star, a hammer, in this case, an inverted hammer or something like that. Or for the sake of example or for the sake of simplicity, let's just call it pin bar. Okay? Whether we see a bullish pin bar like this or a bearish pin bar like this, let's just call it pin bar. Okay? So in this example, we can see that we have something like pin bar here in this green candle, and then it was followed by an engulfing candle right here. So do you think it is a good entry for us to take a short trade? So other traders will take short trade around this candlestick pattern like that we can see right here. But other traders tends to commit in their rule, which is to wait for a retest in this previous support that may turn into resistance. Okay, even if you already saw an entry candlestick pattern like this, but the price isn't reaching this resistance, then other traders may not take a trade in this candle. But if you want to follow this example, let's say we saw we saw a pin bar right here, and if you want to take a trade, then you may take a trade in it. Okay, we can also use multiple time frame analysis, and we will talk about it later if we still have time, because this is the most basic thing in trading. Okay, the multiple time frame analysis is somehow a little bit advanced. Okay, So let's see if the price can reach this resistance zone. So as you can see, just like what I am saying earlier, a lot of traders will use this candlestick pattern like this, even if we don't have a retest from our resistance zone, because this is um, a good entry enough for them to take a trade. Okay, so for an uptrend example, let's see if we can have one. Again, we are looking for an ABC pattern. Okay, for an uptrend, it will look like this, and then what we want to see is for the price to pull back right into this previous A or from our previous resistance. And then once we have an entry candlestick pattern around this level, then we can take an entry pattern right or up, an entry right here, and we can expect for the price to continue going up. So let's see if we can have it for an uptrend example. So let me just look for a good example. So I think this is good. So as you can see right here, we have an ABC pattern right here. So as we can see, we came from this downtrend before creating a consolidation. Then the price was able to form an ABC pattern right here. Okay. So for the sake of example and for the sake of simplicity, let's just assume that we have an uptrend right here. Okay. I know that this is just consolidating and we have our resistance right here. But again, just for the sake of example, let's say that we have an uptrend right here. So again, this is our ABC pattern. And this is where we can put our zone, our support zone. Okay. So let's see if the price can pull back into this level. And then if we can have an entry candlestick pattern, then we can take an entry into it. And then once we have an entry, then I will show you on where to put your stop loss or your reasonable placement for your stop loss level. Okay. So here, as we can see, the price reach our previous support or previous resistance that can turn into support right here. So as we can see, this candle right here is going smaller and smaller. So right here it is big, and then once the price reach our support zone, it is becoming small, right? So let's see if we can have an engulfing candle or a pin bar right into the support. So here, let's assume that we still don't have this big red candle here. So do you think this is a pin bar? What do you think? Can you comment in our comment box? Do you think this is a good pin bar? Again, the pin bar looks like this. It has a body at the top and then a long wick at the bottom of the candle. So do you think this is a pin bar? So someone said no and someone said yes. How about the others? So we have 3 no's and 1 yes so far. So a lot of you is telling that it is not a pin bar. Okay, and Lemuel Gutierrez said that it is a doji, and you are right. This is a doji, and we are going to talk about the the different entry candlestick pattern on our upcoming webinars. Okay, but in this webinar, let's just focus first on the pin bar and engulfing. Okay, so this is not a pin bar, right? And because this is not a pin bar, then we should wait further before taking a long trade. And if we um, continue going down, as we can see, so here, do you think this candle right here is a good pin bar? So we have a body and we have a long wick right here. So do you think this is a good entry candlestick pattern for us to take a long trade? So before taking a long trade here, we can see that we are still above our previous B, right? Remember, this is our second important structure or second important level. Again, our previous A above here is the first important level, and the second important level on our price action structure is our previous B, which if the price breaks this level, then this is not a good trade for us to go long. But as we can see, we are still above it. We came down below our previous A, but we are still above our previous B, and this is still a good trade for us to look for a long trade. And here's a lot of you told me that this is a good entry candlestick pattern for us because it looks like a pin bar more than what we have above here. Okay, so let's say that we bought right here in this pin bar. So now the question is, where will we put our stop loss? So this is where our ATR indicator will be useful. So here, as you can see here, I pulled up my ATR indicator, and what I will do here is I will hover my mouse around my entry candlestick pattern, like here. And as you can see here, the value of the ATR in this entry candlestick pattern is 0.00986. Right? Again, it is 0.00986. So because of that, I will use my price range tool and I will copy the value of this ATR, which is 0.00986. And I will, starting from the bottom of this candle, I will drag it down until I reach the 0.00986. We can go above 0.00986, like here we have 0.00987, but we can't go below it. Okay, so in this case, we can put our stop loss at this level. We can put straight horizontal line into it for us to have a better view in it. So our stop loss will be right below here. Okay, using our ATR indicator and combining our pin bar, combining our entry candlestick pattern with our indicator, we can put or we can locate a good placement for our stop loss, which will be right below here. And it is below our structure right here. Okay, so this is a good placement for our stop loss. And for our target, let's say we are aiming for a 1:1 risk to reward ratio. So if we have 140.5 pips for our stop loss, as we can see here, we have 140.5 pips, then that means we should also have a 140.5 pips for our target. Okay, and or we can just look in this risk reward ratio right here. If it says 1, then that means this is already 1:1 risk to reward ratio for us. Okay, so let's say we took a long trade in this candle and we put our stop loss here while putting our target here. So let's see if we can win with this one. So there, as we can see, just after buying in this entry candlestick pattern, we can see that the price already shoot up to this level, and we can see that the price went up to 104 pips, and then it closed at around 86.8 pips. And if we continue with this trade, we can clearly see that the price reached our target right around here. Okay, so again, this is the first strategy for us if we want to take a long trade. So of course we can't talk about everything because we only have a limited time. So that's why I want you to attend our exclusive Q&A session with me. Okay, so again, to recap, what we did is to look for an overall trend, and then we identify the swing highs and lows like we have here, the highs and lows, the ABC pattern, something like that, the big turbulence, the small turbulence, and then the area of value, which is our previous A and our previous B. And then after identifying all of those things, then we can look for an entry right after the pullback. Okay? So, now that we know what is the CEST, now that we know what condition we need to look for, how to look for an entry, a stop and target, and now that we know how to identify a trend, which is to just zoom out the chart, how to identify swing highs and lows, how to identify area of values, and look for an entry candlestick pattern, the question now is how to open and close orders in real time. Right? So here in our MT4 platform here, as you can see, we also have the same structure level or the same chart that we have right here on our trading view. So here on my OctaFX MT4 platform, we can see that we also have this setup, right? So let's say that we are looking to buy if the price can pull back right into this previous resistance that may turn into support. So let's say that the price breaks this level and then pull back into it. And then let's say that we got a pin bar into this support zone. Then the question is how to open an order real time. Okay, so we can open an order right here. All we have to do is to put our lot size here. Let's say we want to put one lot and then just press buy. Then after pressing the buy button, you can see that our order already fills right into this price, which is the current price. Okay, or we can also click new order here, and we can put our lot size here. And then for market execution, let's or the type, let's just choose market execution. So that means your trade will already be filled once clicking the buy order. Okay, and you can also just right click and then look for trading and then new order, and then the same pop-up will appear. All right, so let's change our chart. Let's try to look at the dollar yen. So here we have dollar yen. And as we can see, the price is showing us lower high and lower low, right? So that means this could be a flag pattern, or this is also a good opportunity for us to take a short trade. So whether if you want to take a long trade, if the price can break this trend line, or if you want to take a short trade, if the price can break this previous low, then let's say we want to take a short trade. All we have to do is to put our lot size here. So let's say we want to put, let's say 0.5 lots, so something like that. Then just press sell, and then as we can see, our order will already be filled. And we can open our terminal, and we can see that our trade is right here. Okay, we can see our account history. We can see our open active trade, and we can close it. So let's say that the price reach our target. Let's say our target is right here, right below here. If you want to close it without putting TP and SL, take profit order and a stop loss order. So let's say the price went down into this level, and if you want to close it manually, then you can just press this X button right here. Then once press, as we can see, the dollar yen already closed, right? So, and we can see that it entered our account history right here. So same thing for the euro dollar. If we want to close it, we can press the close button, and the order will already be filled. All right. So having said all of those things, we now know how to open an order real time. So by the way, we can also just press Control M, M for market, Control M, and you can see that we have our watch list right here. If you want to hide it, just press X or close, and it will automatically be hide. All right. So having said that, now that we know how to open and close orders in real time, we know how to look for a trade, what is an area of value, what is an entry candlestick pattern, the ABC pattern, as well as the CEST pattern. So having said all of those things, now we can go on our Q&A session, and you can comment your chart request if you want to have some analysis for your chart request. You can do it as well. So any question? So for those who are asking about the time frame that I used earlier, we use the daily time frame. So here, Princess Adora is asking me how am I trading news, especially the high impact news. So I personally isn't trading the news. I what I am doing is I am letting the news pass. Then after the news came out, then there's a, a structure level, or if there's a pattern for me to take a trade, then I will take a trade right after the news has passed. So Romulo Ronario asks how to find best trade setup. So just like how I showed you earlier, just use the CEST, use the ABC pattern for you to have um, a better analysis. Okay. So Flynn is asking what time frame to use if looking for a trend. So if you are a swing trader, then you can use the daily time frame or the 4 hour time frame, like here. If you are a day trader, you can use 1 hour. 1 hour below is good for day traders. For the swing traders, or if you want to hold your trade more than, let's say, 1 week, 1 to 2 weeks, then daily time frame is a good time frame for you. Hello, Arthur PNS. I am not using any other indicators aside from EMA and the ATR. Jesse Halurina, I um uh, trading with EMAs is very subjective. So in my case, I am using 20 EMA, but other traders are using 50, 100, 200, or something like that. But for me, as a day trader, 20 EMA is very useful based on my own analysis or my own experience. For the scalpers, the best time frame would be the 5-minute time frame. You can also use 15 minutes. Tito Butch commented 20, 50, and 200 EMA, which is also a very good strategy, especially for the beginners. You can combine three EMA for you to identify the trend. So here, someone asked about the gold. So let's see what gold is doing right now. So here for the structure of gold right now, as we can see, just like what we studied earlier, once the price reach its previous high, so in this case we have an downtrend, right? So the price came from this downtrend, right? So as we can see, if we draw our levels, we have a lower high, a lower low, lower high, lower low until the price violated this previous high. So as we can see, the price breaks this level. Then after breaking it, we can see that the price pulled back into it. Then after pulling back, the price continued to go up. So that means we are now on an uptrend structure, right? And we can clearly see that we have an ABC pattern right here. So if the price can break this level, which it already did, if the price can break this level, which is our recent high, then we can expect for this one to continue going up. And the price just breaks it with this candle, right? So we can assume or we can expect for the gold to continue going up. And if we use our structure, we can see that our next resistance is right above here. So we can expect for this one, for the gold to continue going up to this level. Right? We can also use trend lines. So some traders are using trend lines, and I myself is using it as well. We can target this next resistance if you want to go long with gold right now, and we can expect for the price to go up to this previous high that we have right here. Roberto Dapilan asks where I am looking for the news. So you can use Forex Factory for you to be able to watch out for the news. And Princess Adora asks which pairs I am mostly trading. So you can take a screenshot here on my watch list. So I am um, trading these currency pairs right here. So as you can see, beginning with the Aussie Canada up to dollar yen, I am looking for my setups with these uh, trading pairs or these currency pairs. So you can take a screenshot with it if you want. So driving license Nepal as it is good to use indicators or just price action alone. So in my case, I am using both. You can use indicators with price action or you can use price action alone. So it is working for you. Let's say naked price action like this. If it's working for you, then just continue doing it. Because, trading is very subjective, right? I can't say that you just use only MACD or you just use RSI, I can't say it. All I can do is to share my knowledge, my experience, and what I can advise to you is to stick on your strategy if it is working for you. Okay. So here, Jeremiah Mendoza asks if we can analyze dollar peso. So sure, let's see what a dollar against peso is doing right now. So especially for us Filipinos, dollar to peso is very important, right? So here, as you can see, I already have drawings in it. So here for the dollar peso, once I saw that the price breaks this level, which is around 56.39 up to 56.19. This is the support zone that I am looking for the price to reach, and then I am expecting for this one to make another retest into this previous support. But as we can see, the price breached this 56 level, and then it went down up to this 55.34 up to 55.19 level, right? So the price is now sitting in this previous B. So as we can see, this is our previous B, and right after the price reach it, we can see that the price reacted into it. So this is the power of structure. So as we can see, the price reached our previous B, and then the price is now trying to make a pin bar, right? As we can see right here, if this candle close like this, then we can expect for the price to go up, maybe up to this previous high that we have right here, which is our previous A. So for the dollar against peso, we can expect for it to go back up into this level, which is around 56.19 and 56.39. So for the coming days, especially when Christmas arrives, we can expect for the peso to let's see if the price can go back up into this level. But if the price breaks this level, which is the 55.34, which is our previous B, then we can expect for the dollar against peso to continue falling down. But in this case, what we can see right now, we can expect for this one to go back up into this level. Okay. So Romulo Renario is asking how to find key levels if you are a scalper. So just like how we are looking for a structure in our higher time frame, we can also use those same structure or those same analysis or strategy if you are using lower time frame, such as the 15-minute or 5-minute time frame. So if we go down on our 5-minute time frame, so let's go back to euro dollar. So we can see that the price is showing us a lower high and lower low, right? So because we are on 5 minutes, then we are expecting a quick trade around this level. So we can see our previous high is right here, and our low or our previous support is right below here. So if the price, so we can see that we have a downtrend, okay? And the price is just creating its Darvas box. So if the price breaks this resistance, then we can expect for this pair to go up. But if the price breaks this support, then we can expect for this to go down. You're very much welcome, Princess Adora, as well as Miyaj, as well as Roberto Dapilan. So for Tito Butch, for scalpers, uh, I suggest just pick a pair which is or which only has a low spread. So as we can see here, we only have a zero point 0.3 spread, right? So this is good for scalping, which is the euro dollar, by the way. Okay, so we don't have much time, so I can't explain about the spread, but I can explain it on our upcoming webinars. So stay tuned for that. Okay, so Thank you very much for your time, everyone. I hope to see you again on our upcoming webinars. So I hope we were able to bring value to you today. So once again, this is Paul Mendoza, your trading speaker for today. Bye.